Welcome back. Hope you're having a good Monday morning. Well, for starters, the SGX is suggesting a bit of a pullback, but Anuj joins us in the studio. Anuj, what are you making of this? Do you think observe the first star lows and then get in? Buy on dip should continue?
Yeah, I mean, I think the Friday move was quite interesting. I think the Thursday setup played out on Friday, but the Nifty's correction to 20-day moving average. In fact, Nifty closed right at the 20-day simple moving average on Friday. And the problem for the Nifty is that the IT index, one leg has started a fresh bear market after the October-November rally that we had in IT. Bank Nifty still remains in a bull market, all-time high. So clearly it's old economy versus new economy divergence which is playing out. FMCG, auto, capital goods, all these stocks doing well, cement, while IT is clearly single-handedly dragging the market down. This is also the last important week of the year from the data point of view. You have the FOMC meet this week and the US inflation data as well, which is going to be very crucial. I think for the trade today on the Nifty, you started the 20-day exponential moving average and the put-call ratio is 0.76. The 20-day exponential moving average is 18,455. Normally, this is a buy zone for market and Friday's low of 18,410. That could be your stop. I mean, if you take a Nifty long trade, and that's how normally things work in our markets. I think the index to focus on is Bank Nifty because that again made a lifetime high on Friday, and that's firmly in a buy on dips mode. And my sense is that this 44,000 is still some kind of unfinished business on the Bank Nifty.
Okay, all right, Anuj, thanks a lot for that. Well, given that banking and financial names are doing pretty well, let's get straight to our momentumizer. And the stock that I'm tracking is Indiabulls Housing Finance. It has, that capability of making big moves. But in Friday's trading session, well, it was a relative outperformer. So that's one reason why the stock did come on my radar. But I was looking at the traded volumes as well as the delivery volumes. Nothing really earth-shattering or nothing really to write home about with regard to the NSE data on Friday itself, if you compare it with the 10-day average. But the stock came out of the F&O ban. On a day-to-day basis, it was in that F&O ban. So maybe the stock deserves some kind of attention. And keep in mind, if you're looking at the 20, the 50, the 100, as well as the 200 DMA, the stock is trading above those levels. So, technically, it got some support zones lower. Let's see how the stock performs from here. And housing finance on the whole has been in focus. We could have a potential deal on Poonawalla in the next few days as well. So keep an eye out on Indiabulls Housing Finance.
Okay, so that's our momentumizer of the day. But there are plenty of stocks that will be in focus, continue to be in focus. For now, the pre-opening rates are kicking in about a minute from now. Couple of stocks that, of course, you need to watch out for. The aviation stocks could be in focus because the domestic air traffic data is back to pre-COVID highs. And we've seen it with the way, the Delhi airport is full. And that's, of course, gone viral on social media. But just keep an eye out on names like Interglobe Aviation, which have been doing well in any case. Apart from that, as we were telling you, stocks like Bharat Forge, etc. could also be doing well purely because of the focus on the defense sector. But HCL Tech, that stock took a sharp 7% knock in trade after the company told investors that growth will be near the lower end of its range. The management said that this downward revision is driven by higher than anticipated furloughs. To discuss this, we are joined by C. Vijay Kumar, the MD and CEO of HCL Tech. Mr. Vijay Kumar, good morning and thanks for joining in. That's the first question. Can you tell us what changed in the last 2 months that you had to give us a warning on growth after scaling up your guidance last quarter?
Based on our certain assumptions that we made in October about potential impact of macro, and usually in December, some clients ask for mandatory time off. So we had made some assumptions, and whatever the impact was a little higher than that. So that's why we had given a narrow guidance of 16 to 17% on services and 13.5 to 14.5 on an overall number. So in the narrow guidance, we said we will come at the lower end because the impact of some of the mandatory time offs and some of the macro aspects in some verticals were a little higher. And that's why we gave a little precise guidance. And especially that we've had an investor day and whatever we know, it's very important for us to tell the street. However, we should keep in mind that 16% growth, even at 16% growth in services, it'll be one of the highest growths in the industry. So everything has to be kept with that context.
Okay, Mr. Vijayakumar, good morning. The three sectors which are seeing higher than expected mandatory time offs are BFSI, telecom, and high tech. But is it just one or two clients which are stressed out, or is it more broad-based than that?
I think it's maybe 3 or 4 clients in these verticals. That's what I would say. However, one should keep in mind, I mean, we did talk about the bookings. We expect to have a decent booking. The deal momentum is very robust, especially the vendor consolidation and the cost efficiency led deals. A lot of decisions are being taken, and the deal flow is quite good. And we expect to have a decent booking this quarter. The pipeline is good. We expect to have a decent booking in the next quarter. Both of this will feed into the FY24 numbers. And what we also shared as an update was the talent situation is slightly easing. And we believe some of the efforts that we put in the last 2 years in terms of higher number of freshers hiring, also a lot more emphasis on upskilling, and also a lot more emphasis on nearshore locations. All of this will help us improve our margins in the near term. Currently, our guidance is 18 to 19% for this fiscal, but our aspiration is to get back to the 19 to 20% range as we move forward. So good deal momentum and good progress on all the cost levers that we have been working on. These were the two other updates that we gave, both of which are going to be very good for FY24.
All right, Mr. Vijay Kumar, 3 to 4 clients in each of these 3 verticals. So can we assume that around 9 to around 12 clients are seeing some weakness?
May not be. I think it's just a handful of clients on all across the board, I would say.
Okay, so would you say that this could be an industry-wide phenomenon? I'm asking because we haven't heard from any other companies talking about large furloughs or, cancellation of orders. But what is your own view on this?
I mean, I can only comment on what we are seeing, but just looking at the environment, I think it's mostly common for the industry, I would say. Nothing very unique to us, because we are working with these clients. There are other providers also working with same clients.
All right, Mr. Vijay Kumar, do you think this slowdown, though, could spill over?
See, the counter to that is the strong deal flow that we are seeing. We have not seen any slowdown in decision making because the cost efficiency and vendor consolidation opportunities are getting decided as per plan. At least in US, we see that to be happening in a very, very fast manner. So I think that should help mitigate any further reduction in the discretionary spend, I would say.
All right, the FY23 margin guidance is at 18 to 19%, right? Will you be at the lower end, middle end, or upper end? I ask because if you're scaling down your revenue guidance, then for sure there'll be some trickle-down impact into margins as well.
No, I mean, half the year is over. You know what the first half margin profile was. We will do better in the second half. I don't want to be more precise than that at this point.
Okay, then let's get your view on the price hikes.
See, we had a good benefit of realization in the last 6 months based on all the billing rate enhancement that we were driving. But moving forward, I think getting increases may be difficult, but I expect the pricing to be stable because still for some niche skills and some of the newer skills, the demand is quite high. So I think the pricing, I expect it to be more or less stable as we move forward.
Mr. Vijay Kumar, the management of Mastech just told us that new acquisition of orders, perhaps there may be a slowdown. But what are you seeing in terms of deal pipeline and order booking?
I think order booking will remain robust, maybe a little less on the discretionary side, but more on the cost efficiency. And there's $120 billion of vendor consolidation opportunities that are in the anvil in the next 2.5 years. That's also one of the comments from ISG. So we are very strongly placed in vendor consolidation opportunities, primarily a model where the application and infrastructure services are being outsourced in an integrated manner with both the support and the change programs built in as a part of the new operating model. That's specifically a sweet spot where we have had a lot of wins. And I think this consolidation opportunities will drive a good momentum for us in the coming year.
Okay, well, we'll leave it at that. Mr. Vijay Kumar, thanks a lot for joining in and explaining to us what's happening with the industry as well as, with the company. Prakash Diwan is still with us. Prakash, you heard from the management. Any thoughts? And if you're an investor in HCL Tech, should you just keep the faith considering that, these are cycles and at some point they'll come to an end? Or do you think that it's an opportunity cost and it's just better to move out?
No, I think it's absolutely cyclical in terms of what they're going through, and combine that with, let's say, what we heard from the Mastech management. Of course, it's not something which is very broad based in that direction, but this is by and large what you could expect going forward. And as I said earlier, come January, and you'll probably see an opportunity to buy into these companies from a longer term perspective. So this is a blip. Whether you want to see it as a speed breaker, in that trajectory, or a dead end is your call. But I think it's just a pause. Cyclically, the industry will get stronger after this slowdown in terms of revenue build up. But and then margins and all will start coming up. So you keep the faith. These are businesses that have been built over years, and the franchise is too strong to be ignored. So don't need to jump the ship just because of a weak quarter or a couple of weak quarters. But keep the faith, and in fact, buy into it when you get that dip sometime end of this year, end of this financial year, is my guess.
Okay, all right. Well, just a couple of pre-opening rates, and Prakash, I want you to come in on that. On the upside, NTPC is up almost about 0.2%. You have Sun Farm and Britannia that are not doing too badly. But overall, the market is settling with a cut of about 90 odd points. And once again, it's IT that's under pressure. So you have Infosys, TCS, HCL Tech is not too bad, but Infosys and TCS are topping the charts. In the broader market, you'd want to look at some of these names. So whether it's a Bharat Forge that's in focus, Punjab National Bank, there was that big upgrade. Poonawalla FinCorp as well is up almost 0.8%. Any thoughts, Prakash, on Poonawalla FinCorp?
So, this is the company that's been trying to do too much too soon, is what I get a feeling. And essentially it will probably take some time for it to come to a scale which is comparable to some of the larger peers that it's kind of echoing the business model on. Good price to probably book some profits, actually, is what I would say, and move into some of the more classically simpler business models on the NBFC side.
Hey, all right, Prakash, thanks a lot for joining in this morning. Wishing you a good Monday and a rocking week ahead as well. Well, it's around 9:10, so good time to get Sudarshan back with us. Sudarshan, tell us, what's your 9:10 call?
Well, the Nifty is a buy only if it falls 100 points from the open. Alchem Labs is a buying opportunity with a stop under 3,000. Adjust the stops according to the opening price.
Okay, Mitesh, what about you?
I'll recommend a sell on Tata Power with a stop at 223.5 for targets of 210.
Okay, all right. So those are setups which are coming through from our experts. The rupee is open weak. It's down quite sharply, actually, as compared to the dollar. That's just 10 minutes of the rupee market. And it's a big cut. I mean, 36 paise straight away. Last week, we saw very large moves in the currency. And that continues right out of the gates this morning as well. Just almost a 0.5% move is what we have with us. So let me just quickly highlight one more name, which I think is interesting. And this is something which we will try and do. Just something you should keep on your radar. And what we're doing today is, HPCL, the oil marketing pack, but HPCL in particular. So I want to put out a chart first. This is the daily chart of Hindustan Petroleum. All the way from the middle of 2021, you've got that's the daily chart. So as you can see, it's a downward sloping trend line. From the 15th of November 2021, it's got 3 touch points. The first one in January of 22, April of 22, and August of 22, and after that, you've got this touch point now in December. On Friday, we've ended above this particular trend line on HPCL. Now, you can look at IOC and BPCL as well, and they will seem similar. Why are we highlighting this? Oil marketing companies have been perhaps the most unloved, the most hated sectors out there. Absolutely huge underperformers. Even as other PSU parts of the market have done very well, not so much oil marketing companies. The reason I'm highlighting this is very simple. Oil, I would say inexplicably, is down very sharply, right? I mean, it's down $20 just in the last 1 month or so. And this is a straightforward, a big positive for oil refiners, but more importantly for the marketing side of business as well. These companies were losing money product prices, which is diesel, petrol prices, etc., they were ruling very, very high. There has been a little bit of correction there as well. And, after 2 quarters of very bad news, it's possible that at the margin, things may be turning around. Now, the big question here really is oil needs to stay lower and needs to stay down, maybe go even lower and not see a big rebound. Because, I mean, if it starts to move higher once again, I mean, that thesis goes out of the window. So keep an eye. Let's see if this really fructifies into something. This is obviously not a recommendation, but something that at least both on charts and in terms of fundamental news flow at the margin may be starting to turn a little bit. I would say out of the three, IOC, HP and BP, in terms of setups, HPCL perhaps is looking the best. But let's see. Of course, there is the overall market overlay as well, which is negative. So you want to keep an eye out on that as well. But something to watch out for and keep on radar. Sonia.
Okay, so keep an eye out on these stocks. But in pre-opening, there are a couple of other stocks that do deserve mention. There is Punjab National Bank that's rising now. JP Morgan has upgraded the stock. So Abhishek is here to tell us about what brokerages are doing with respect to banks. Abhishek, over to you.
Well, Sonia, to begin with, JP Morgan, as you mentioned, has written on PNB. They have upgraded their recommendation to overweight from underweight and increased the target price to 72 from 34 that they had earlier. So the upgrade is due to net slippages, being negative in Q2. That is, the recovery pace is actually outpacing the slippages. So stress is minimal in the corporate book. The SMA2 loan due between 60 to 90 days, that's only at 0.1%. Growth is getting better, but is lagging peers. However, the bank's CD ratio is just 70%, which augurs well for loan growth going ahead. Now, we also have Jefferies on IndusInd Bank. They have a buy recommendation. They have increased the target price to 1,600 from 1,530 that they had earlier. They said that the bank is ready for the next leg of re-rating. So they expect IndusInd Bank's growth rate to be north of 20% plus for FY24, followed by an ROA of 2% or even more. So payoff will be seen in terms of the new loans segments that the bank is focusing on, the initiatives taken on funding and credit quality checks. So valuations are attractive and CEO tenure is the other thing that they are watching out for. Back to you.
Well, thanks a lot. That's very timely. The market has opened for the day. It's the start of a brand new week and we've opened on the back foot. So the Nifty is down about 90 odd points. It's a 0.5% cut that you're staring at on the index. The Sensex is down 320 points. So it's not a good opening if you're a bull, that is. It was on expected lines, perhaps, given the kind of weak cues that we had from across the world. Infosys is your biggest loser. HCL Tech, despite the management commentary, is down about 1%. The entire technology pack has been sulking ever since HCL Tech lowered its guidance. TCS down about 1%, Wipro following suit as well. The other pocket that's not looking too great this morning is metals. Hindalco, Tata Steel are down about anywhere between 0.5% to 1%. And then you have auto stocks, Eicher Motors, Maruti Suzuki that are trending on the red line. Nothing alarming, but about 0.5% cut over there. Let me also draw your attention to a lot of the large cap, the heavyweights. So there's Reliance, Axis Bank, HDFC Bank that are all trending below the red line. So there is pressure there. And on the green side, you have something like a Grasim, NTPC, Sun Pharma and Tata Consumer Products. Few and far between, really. It's largely a start in the red. The Nifty is down over a century now, actually. The Sensex down 420 points. And the advanced decline ratio is also in favor of advances, but very marginally at the moment. But lots of stocks in the broader markets in focus. And in fact, the mid-caps are not doing too badly. There's a degree of outperformance there.
Well, that's right, Sonia. And we'll be tracking that very closely because in Friday's trading session, you actually had the small cap index that took a hard knock. So good to see a relative outperformance today. In terms of broader markets, well, stocks are in focus. Glenmark, the US FDA regulatory woes continue for them. So that stock is under some pressure. It's down close to around 3%. In fact, that's the biggest loser. Mid-cap IT as well as getting smacked. Birla Soft, LTI, Mindtree, all of them, in fact, are under some pressure, down between 2 to around 3%. On the flip side, you have PNB. The JP Morgan upgrade to overweight from underweight. So that stock is the biggest gainer. It's up close to around 1.5% odd from the F&O pack. Interglobe Aviation, maybe the unlock theme, cooling down of crude oil prices as well. That's up close to around 2% as we speak. Bharat Forge as well has opened up higher. A couple of other names, Vartech Vabag, they won a 260 crore order from Romania, waste treatment order. So, that one as well should be in focus. I just hit the exchanges a few minutes ago. So, Vartech Vabag, that's opened up with a gain of around 2.5%. Gujarat Gas, they pulled back on their pricing. So, that stock should be in focus. It was something actually the street was expecting. It could, however, be a positive for a couple of these other companies like Somani Ceramics as well as Kajari Ceramics. So, for the time being, Gujarat Gas down close to 100%. I'm not sure whether we're getting a positive rub-off on those stocks. Well, they as well are a little bit lower. So safe to say, the Nifty is down 120 points odd, going towards that crucial zone of around 18,350. But the mid-cap index doing a relative outperformance. Prashant, what else?
Jaiprakash Associates, Nigel, is up 10%, and let's have that up 11.75. That'll account. I think that Dalmia Bharat related news flow there. Jaiprakash Associates is coming up with volumes. That's the only reason I'm highlighting that. It's a small penny stock now, but it's a large company. But of course, the price is where it is. PSP Projects is up 2%, so that's coming up with large volumes. So keep an eye. Interglobe, Indigo, 2.25% higher. This is, I guess, one of the oil beneficiaries. But 20.34 on Interglobe. Ease My Trip is up 3%. 54 on Ease My Trip. There is, I think, National Assurance, which is up 3% or so. The insurance, the general insurance company. Delivery is up, 2.33% or so. There is Gravita India, which is up about 6%. So there is actually a lot of stuff on the upside as well. Market breadth is negative. And, that for starters is 1150 stocks lower and about 700 stocks which are higher. No support from IT at all, as we've been pointing out. Infosys is the top volume-led loser with a 2% cut at this point in time. PSU Banks is the other pack, right? Central Bank, I can see, is down 3.75%. Is there anything else in the PSU Bank space? UCO is down 3%. So it starts slower. And PNB, I think, was higher, but not by very much. So that's another one you may want to keep an eye out on. It's just about 0.8% in the green, but at least it is in the green. Friday, we saw a large, 2.33% cut on the index, the PSU Bank index, on volumes. Volumes highest in at least the last year and a half or so. So that's market opening 124 points lower. And of course, we are right out of the gates below Friday's low as well, which was around 18,400 or so. We're at about 18,373. Manishi Ray Chaudhary is Asian equity strategist, equity cash Asia Pacific at BNP Paribas. Manishi, great to have you with us here. Thank you very much. You got this rupee weakness that I want you to address, which is starting to emerge again. Almost a 0.5% weakness in the rupee against the dollar. So your thoughts in terms of what that represents and what that is showing. We have no great dollar strength anywhere, at least not this morning or over the last many days now.
In fact, when we met you guys, Prashant, just about a month ago, and I was in Bombay at that time, I think I had hinted about this, that Asian currencies in general would have another round of, turmoil, possibly late into this year and spilling over into first quarter of 2023. I think that's just about beginning to play out. The reasons are not difficult to, sort of imagine. We still have a significant degree of Fed tightening left. We think another 125 basis points, beginning with a 50 basis points tightening in December and another 75 basis points in the first quarter of 23. And perhaps more importantly, quantitative tightening, which the Fed has highlighted time and again, is just about midway. From September, the Fed was supposed to accelerate it to $95 billion a month. They have only done about $65 to $70 billion a month, and that acceleration is likely to come through now. I think we are seeing some effect of that in those markets, in those economies, which have a chronic current account deficit. So India could turn out to be a little more vulnerable as a consequence of what we're likely to see. It may not be a long drawn-out affair, but it'll certainly be a short and sharp depreciation. In fact, just to let you know, a couple of days ago, in fact, the end of last week, we downgraded India in our our Asian model portfolio to a neutral from an overweight stance that we have had for quite some time. And instead, we upgraded China to an overweight. And this also kind of links to that same phenomenon that you're talking about. And we think China reopening seriously over the next couple of quarters is a driver towards this, outperformance of that hugely beaten down market.
Okay, that's interesting and that's important. So you're saying you've downgraded India to a neutral from an overweight and upgraded China. Got that. Manishi, good morning. By the way, I just wanted to highlight for the benefit of our viewers, these are the first signs of a steep sell-off in PSU banks. So is the rally over? Only time will tell. But I do want to get your attention. Central Bank of India, UCO, IOB, Bank of Maharashtra are all down about 1 to 4%. Just keep that on your radar. Manishi, what do you do with IT names now? There's a mixed view coming in. Some large corporates telling us that there are furloughs, there are delays in decision making. But then some others saying things are not too bad. Do you stay away from this pack entirely or do you use this dip to buy?
We have incrementally turned a little more bearish, a little more cautious on the IT services sector. In fact, this downgrade to India that we did, it's really concentrated in two sectors. We have taken out exposure to the consumer staples sector, lock, stock, and barrel, and we have reduced exposure to the IT sector quite significantly. In fact, we had two of the frontline large cap stocks. We now have only one. So yes, I would think that this IT companies, which have done reasonably well over the last couple of months or so, up about 15 to 20%, they would have a round of underperformance because we're now entering a period where the recessionary impact on demand in the developed markets would become more apparent.
Hi, Manishi. Morning. When we chatted a couple of months ago, you said that you like some of those auto-related stocks. Do you still like them?
Right.
And if yes, which is the segment you prefer? Oopsie. All right. I think we'll try to get that line back. By the way, the Nifty is under some pressure. We are approaching that 18,350 odd mark. So I think you need to be looking at this mark very, very important. If it has to bounce, you're likely to bounce in this vicinity of around 18,350. The 18,400 puts a lot of open interest build up. The premium is around 50 rupees. So that's why we're saying that this mark is very, very important. But I believe we have Manishi back with us. Manishi, you're making a point on auto stocks. Your preference out there?
That's right. So we still like the auto stocks, the four-wheelers, and in particular, the top-rung frontline four-wheeler companies, which not only have market leadership and therefore have pricing power, who are also the beneficiaries of a very large distribution network. We are adherents to the concept of affluent consumption in India, and we think that that's a theme that's likely to play out. It's already been playing out for the past 6 months or so, and it's likely to play out for much longer.
Affluent consumption, right, Manishi? No, got that. So what else, Manishi, are you excited about? Sectors, subsectors, anything else? We, by the way, in a bit from now, after you, will be speaking with a defense company. I mean, perhaps the best placed play on Indian defense, Bharat Electronics, but go on.
Right. I mean, I don't disagree with that. In fact, simultaneously, as we speak, we have we have published a very, detailed report on the Indian capital goods and industrial sector. And defense spending is one of the key themes that we have highlighted. And we are quite positive on that theme. Even though the capital goods or industrial companies as a whole, as a group, they may not really, be very palatable to the investor base because of the sky-high valuations that they have reached. Defense is clearly one sub-segment that we like over there. Now, coming back to your original question, what are the other themes that we like in India? First, India is clearly going through a very strong cyclical economic upturn. If you look at credit growth at 16, 17%, if you look at GST collection, which are about 25 to 30% higher, it clearly points at strong revenue growth for the corporates and a strong underlying economic demand. We think one should play this through the banks, and we like the private sector banks. The banks not only have possibly the cleanest balance sheet over the past decade or so, even the corporate universe in general in India has a deleveraged balance sheet. The total debt to equity ratio is hardly about 0.5 or so. So, I think that's one important pocket in India that we like. Apart from the usual ones, I talked about autos. I think some of the telecommunication exposure and even healthcare through both the leading pharmaceutical and the leading hospital stocks should be considered at this point.
All right, since you spoke about defense, we're going to take a cue from there. Manishi, thanks a lot for stopping by and speaking to CNBC-TV18.
Thank you.
Well, defense stocks are on fire. The government is aiming for an import substitution, bringing new opportunities for the domestic defense firms. But is the optimism reasonable, and what's the scope? Let's find out. Bhanu Prakash Srivastava, the chairman and managing director of perhaps one of the strongest defense stocks, Bharat Electronics, joins us now to talk about that. Mr. Srivastava, thanks a lot for joining in. I first want to ask you about the multiple MOUs that you signed recently at the Defense Expo, whether it was with Mislova Systems, with Yantra India, with Triton Electric. There are different avenues for revenue generation for Bharat Electronics. But just want to understand, what are you targeting in the near future? By FY24, which one of these could translate into growth, and what are the numbers that you're looking at?
Yeah, good morning. Bharat Electronics has been a primarily defense company where we have been targeting core defense business addressed to our all three services and related businesses. However, the MOUs which we are signing with the various organizations like what you mentioned, Triton also, Munition India also, some aerospace companies also, we have signed the MOU. We have signed MOU with the Delhi Metro also recently. We have signed MOU with Chennai Metro also, Airport Authority of India Limited also. So these are to take leverage our core competency in defense electronics and go for the higher level of growth.
Hi, Mr. Srivastava. Good morning. Stakes are riding high. In this year itself, the street is very bullish on BEL. It's up close to 50%. That said, at the end of your first half of the year, you had given a guidance, right? So any change to those numbers? Revenue growth you were talking about is 15%.
No,
margins of around 22%.
We are sticking. Yeah, please go ahead.
Yes, sir. And the third part was the order inflow.
We stick to whatever guidance we have given of revenue growth of around 15% and EBITDA margin of between 21 to 23%, averaging out to 22%. Similarly, we are expecting an order inflow of around 20,000 crore in this financial year. Till now, we have already booked the order worth around 3,100 crores. And as we progress in most of the defense procurement, you say that proposals, they start in the first quarter of the year, and then normally they fructify at the end of the Q4. So we are expecting order inflow close to around 20,000 crore from all sectors, be it your electronic warfare system for high altitude applications, be it medium power radars, or many other order which are due in sonar segment, communication segment, and other related areas. Yeah.
Okay, just wanted to confirm that, sir, because as you said, you're only 3,000 crores odd is the order inflow, but you're confident that will reach 20,000 crores, the order inflow, because quarter 4 is the lumpy one and you'll get a lot of orders. Sure, right?
Yeah, because the way this process goes on, especially big ticket programs, when CNC is concluded, and after that there is a process of approval of the order, and if value is high, it goes to Cabinet Committee on Security sometimes, or Raksha Mantri, and also it takes time.
Right. Okay. Fair enough. No problem. You said that Q1 a new calendar, and it starts, and by March it fructifies. So that's the way this works. Fair enough.
Most of the cases, and many big ticket programs, they take more than a year also. So many of the programs which have been in pipeline for last 2 years, they are at this stage of fructifying by Q4.
Yeah. These non-defense sort of segments, right, which you said you're leveraging your core defense expertise into other areas as well. What could be, what's the scale of ambition at BEL? What could you do? I mean, you've got the capability, you've got the scale, but what could you grow this business to? The non-defense one, which is about 12% of revenues right now.
Yeah, right. Normally, if you see the defense to non-defense ratio has been around 80 to 20. Some year it becomes 90-10 and some year it becomes 75-25, depending upon what are the order inflow from civilian sectors. So, while leveraging our capabilities in non-defense sector, we tend to maintain that ratio, because when we are moving up on year to year at 15% plus basis, we have to leverage that our core competencies in non-defense sector also, so that we can maintain this growth.
So you were telling my colleague Nigel that out of the 20,000 crore order inflow guidance, you've secured 3,100 crores. So there's still a big chunk, right? 17,000 crores that you need to secure. Out of the businesses that you've diversified into, say solar, railways, smart cities, e-governance, do you see any vertical where a big chunk of this, orders can flow through? Maybe not in FY23, perhaps in FY24?
No, not. No. It takes a lot of time, because whatever MOU we have signed with this, there is a long cycle time of approving the products and then going for certifications, and then finally results coming. So what we are targeting is not with these new MOUs which we are signing, but which are already existing one, and we have progressed a lot in order acquisition.
All right,
process.
got that. So you're looking at mainly what the orders what you've secured already. Now, there are a couple of orders, right? There's Akash Prime, there's Him Shakti, there's the weapon locating radar as well. Can you tell us what are the execution timelines for this, and when will this lead to revenue conversion?
You see, coming to Akash, this order has to come to BDL. It is at final stages, and we have already under discussion with BDL for finalization of the our share. So the moment order is placed on BDL, we will quickly finalize it with BDL, and we will get the orders. Similarly, for Him Shakti, we have moved a lot ahead, and then our customers are in the process of finalizing it. So we hope Him Shakti also, which is electronic warfare for high altitude versions, will come by this quarter end.
All right.
Similarly, WLR also trials have been completed, and they are all progressing.
Okay. All right. Mr. Srivastava, I particularly wanted to talk about one LOI that you received. That was from TEV, that's Triton Electric Vehicles, for hydrogen fuel cells.
Yeah.
I believe the total, value was around 8,000 crores odd. So give us an update out there. What is the value? When does that turn into revenues? And some progress on this, because the stock market is very excited about this theme. Go ahead, sir.
But this is a long-run process. This was the only letter of intent given by Triton.
Okay.
As per our understanding and MOU, first we have to give one set of batteries to them, which we are working on. And once this set of batteries, they go through approval process and they are approved, and then our terms and conditions and commercial agreements are finalized, then we will get the order. That also is linked to their delivery schedule of final products like EV trucks, which they have to deliver to their end customers. So if you see that what 8,000 crore they have projected, it's maybe it will take 2-3 years before we pick up the revenues.
So from this particular order, it's still work in progress. You're supplying the first set of batteries, and then they'll have a look at it, and then the business will pick up from here. So safe to assume from here, there will be no business that will come in FY24 at least?
I could not hear you.
FY24, from the next fiscal onwards, there will be visibility, or is it a story of FY25-26 from this particular order? Triton.
We will be able to have visibility next FY only, and then I will able to give some further commitment.
So revenues,
because unless I give first set of batteries and it goes through approval.
So revenue, no revenues at least for the 2 years, right? That's what we were trying to get at from this.
Yeah.
Okay. All right. All right. Got that.
Hello?
Yes. Go ahead, sir. Go ahead. We can hear you.
I could not hear you. I could not hear you. Can you repeat your question?
Right, Mr. Srivastava, I was just saying that no revenues from this, from Triton for the next 2 years, right? On the battery order.
Yeah,
no.
revenue once yes.
Oh.
We got that, sir. We got that. Let's move on.
Okay. I had another question. Since we're talking about this lithium-ion battery space, you've also constructed a plant for research and manufacturing of lithium-ion prismatic cells, and this will be used across categories, whether it's in e-mobility, remote power systems, underwater as well. Just want to understand what kind of growth do you see overall from this segment, and what is the capex that you've put on board? Is there any more capex that you have planned in this space?
See, lithium-ion battery cell, we took the TOT from NSTL, a DRDO laboratory, and we established a small plant spending around 50 crores or so. But this is for initial requirements of some, whatever you have mentioned, some marine batteries or some other places. So it is a pilot plant where capacity is limited. Once revenue goes up and we have more likelihood of orders, we can replicate it and scale it up.
All right, we will leave it at that. Thanks a lot for joining us, sir. All the best and keep continuing to grow the way you are and rewarding shareholders as well. That's BEL. They're sticking to their target, 15% revenue growth, 22% margin and 20,000 crore order inflow by FY23, although they have reached just about 3,100 crores, but it's generally lumpy in the last part of the year. Let's do one thing. Let's slip into a quick break. Lots more coming up. We'll be chatting.
So
sure, go ahead.
Look at the market, Sonia. I mean, basically the Nifty has cut its losses by half. We were down 140. We are down just 60 points. So just wanted to leave you with that. It's a very sharp bounce that we have on our hands. And let's just look at the bank Nifty as well. I think, the banks have also come back very sharply from a low of 43,384. We've bounced to about 43,540 or so. So this is looking much better. So the dip that we saw, and it was a large dip, that's been completely kind of bought. Take a look at the large cap Nifty stocks and where things are at. So coal ITC is up 0.5%, Indices is up 0.5%. I don't know if tech has turned around. Tech has turned around. HCL Tech is up 0.5%. I mean, the low I think on HCL Tech was 1,020. From the low, it's bounced about 10-12 rupees, 1,033 now.
Yes.
And the Tech Mahindra, the low was 1,030. It's at 1,038 now, and so on and so forth. So I mean, this is a nice bounce that we're getting within the first 40 minutes of trade or so. We'll take a quick break here. We'll stay in that capital goods defense kind of space when we come back, because we have the management of BHEL joining us. Nalin Shingal is the CMD of the company, and we'll be speaking with him in just a bit. Later on, Pinakin Parekh of JP Morgan India will also be joining us to discuss trends in the metals and cement space. Stay tuned.
Powered by Sensex.